Good morning. This is Bruce at Fleet Capital Management. It is Saturday morning, the 22nd of July, 2023, and we're going to take a look at the market, as we always do with our trend analysis, but I'm going to really hone in and focus your attention on a couple of different indicators that I've created and how they will affect us very positively. I believe with what we have created, I would suggest to you that our accounts will never again from today forward participate in the downside losses of a bear market. We may profit in a bear market, especially because of this new system, but we'll never take those losses again. So I'll get to that in just a moment. As always, we need to say that the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please subscribe to this YouTube channel. And as always, any questions, please direct them to Bruce at fleetcapitalmanagement.com. Here's our website, fleetcapitalmanagement.com, two buttons on the right. This one on the bottom, you can get our most recent weekly market updates, our analysis, and the top button, you will be taken to my calendar to schedule a Zoom meeting so we can talk one-on-one. Last week, I showed you this slide. But I just want to remind you, this is the first and second half of each quarter, and we are in here right now. And this is over the last 50 or 70 years, I can't remember, but we're in this period right now. And generally speaking, that half of the quarter is very positive. And again, this is an average over 70 years. This isn't every day. This is an average over 70 years, and we have to use those things. The worst period in the market for the year is coming up from mid-August until the end of September. We're not here yet, but we're getting closer and closer. We had a decent week, a lousy Thursday and Friday, and look at what week we're in. And again, these are averages, but we're in here. And it's just funny how correlated some of these things seem. So let's go over to our matrix. These two boxes are the daily, these two are the weekly, these are pure trend analysis, and you can see that we're in the green all the way across. Okay, now for today's video, what I want you to concentrate on is this box down here, the daily 821, and this box right here, the weekly 1020. And this will all make sense to you in a minute. I have them colored the same and highlighted and outlined the same. So those are the two most important boxes on this whole page, to tell you the truth. I need other pieces of it in my trading analysis, but these are the two I want you to focus on. First, we're going to focus on 821. So let's go over here, and we're going to go to an S&P chart where the daily is on the right-hand side. Each tick is 1 day, and we'll come back to the weekly in a few minutes, but this is each bar is 1 week. So looking on the right-hand side, that white trend line right there, that is the 8-day moving average. Okay, that's white. The blue line, and we're only looking at these two lines right now, the blue line is the 21-day exponential moving average, okay? And right over here, you see 8 and 21, and the D means daily. In the way the system is now set, when the 8 crosses below the 20, I can no longer buy new stock positions for your account. The current stock positions, nothing happens because we have stops under those. But when the 8 crosses below the blue, the white below the blue, 8 below the 21, I am restricted. I'm restricting myself from buying any new stock positions because we're probably in a short-term pullback that is a normal part of a bear market. But why participate in that with new securities? Don't new securities go up when the market's going up for the most part? Yes. When the 8, white, crosses above the 21, blue, that gives me permission to add new securities to your account. And this is going to make a lot of sense to you in just a minute. So what we've looked at is the 821. The 821 will help us avoid some pullbacks, corrections, things like that, meaning avoid it by not adding new securities, okay? The 1020, and this is the W is weekly, and the EMA stands for exponential moving average. The 1020 is our, if you look down here, our bear market avoidance indicator. So let's look at that. Let's go over to the left panel, which is weekly. The green line is the 10-week moving average. The red line is the 20-week moving average. When the 10-week average, and what we're looking at here, I know it doesn't look like that big of a deal on this chart, but this is the bear market. This is pretty much all of 2022. This was very significant. So let me make it a little bit bigger for you if I can. Okay, so this was the end of 2021, and now we're into 2022. When the green line, the 10-week, crosses below the red line right there, where it happens to say no go, right there. And by the way, that is Valentine's Day 2022. So remember 214. When that happens, we are officially in a technical bear market. And what will happen then is, obviously, I can no longer buy new positions, stock positions for you, but at any remaining stocks that we hold, our stop management will be very tight, and we will probably get stopped out, because our goal from this day forward, with a caveat, which will come, is to just be in cash and completely avoid, because when the green is below the red, I am prohibited in my system from adding stocks to your portfolio that only benefit when the market's going up. I can't do it here. I can't do it here. Okay, does that make sense? Now, on February 14th, the bear market started. But just before then, let me show you what happened. Just before then, bear with me. Let's go find it. Okay, it looks to me, okay, here's the bear market, and here is the beginning of the bear market. I'm going to use a little crosshair for a second. The 8 crossed below the 21 right there, okay? And what does that say? Forget bear markets. That says I can't buy you new securities. What date did that happen? On the very bottom, if you let your eyes run down, it's January 13th. So that happened a month before the bear market. If you look to the left, the vertical line is matching the vertical line on the right. And look how much earlier we would have gotten out of the market to avoid a bear market. So the combination of these two things will, A, in very early January, we would not be buying any new securities. And that's good, because 4 weeks later, the bear market started. And once the bear market starts, we don't buy any securities at all. We want to be in cash. So there's the 821. Here's the 1020. Now, why am I making such a big deal out of this? Well, A, it's a phenomenal system, but B, I show you this every single week. There is no hiding. If that 8 goes below the 21, that box is red. If the 10 goes below the 20, that box is red. So if I just want you to see that this is being shown to you, and whoever watches these videos, every single week. And that will, we're not allowed to use the word guaranteed in this industry, but pretty much guarantee you, we will not participate to the downside of losses in another bear market ever. I say that with just extreme confidence. The last part of this is for the more aggressive accounts, for level 1, group 1 accounts, when we go officially into a bull market and the 8 crosses below the 20, we will buy securities called inverse that actually make money as the market's going down, or we may do put options that make money as the market is going down. So we have very, very strict rules as to when we can do that and when we can't. But I think the takeaway from this is we just experienced the very last bear market that we will ever experience as clients of Fleet Capital Management, ever. Okay. And by the way, I back tested this. It worked before 2022. It worked right there before the COVID crash. It worked right here before 2019. We had a bit of a pretty strong pullback. So I have back tested this to every major pullback we've had. and it worked 100% of the time. Okay, so that's all I wanted to show you about that. I'm sorry that took a long time and I kind of beat it into you, but it's very, very important. Any client working with Fleet Capital Management will never go through the negativity of another bear market. They won't, as determined by our technical analysis and all of our systems. It's very, very important. Now, let's go over to the daily chart of the S&P 500. You're seeing again, the 8 is above the 21 is above the 50. This is perfect. This is just a bull market, even though we're seeing some weakness. Let me take that off, put the Hull suite on. This is just a faster moving average, and everything looks good with the Hull. Linear regression. Each time we get to that top bar or above the top bar, it is very normal for stock prices to come down. We're still in an uptrend. We are still in an uptrend, but this is the bottom area bar of the uptrend. This is the top. This is 2 standard deviations and 2 standard deviations, and the red is the mean. And every time we get too high, this is called mean regression, we seem to dip back and go back up and dip back, because that's what the market does. This is how the market trades. A couple days ago, we were up around the top, and this adjusts every day because we're only looking at 100 trading days. So every day it adjusts itself, and we might have a little bit of weakness and come back here and then continue up, because that's the way the market trades. It doesn't go in a straight line. Our super trend, which I use for stop management a great deal, all looks beautiful. That's the ATR, average true range. These are just order blocks and fair value gaps. And all this does is it tends to act as support as it goes up and down. So this is more for me than for you. The ADX is way above the 20 line, and the green is there. So we're in a strong uptrend. We are getting a little bit of weakening of momentum. Yeah, right in, you see that? So having a pullback would not be surprising. And, excuse me, one more time, if we go back here, we are in this period and we are heading towards this period, which is the second half of a quarter. So what I'm saying is our accounts have been doing extremely well. But I would not be surprised. I would anticipate, I don't predict, but I anticipate and then trade around it. I would anticipate that here today until probably, I would say October 1st. So 2 full months, August, September, those are generally the most volatile and the weakest time of the year. So just anticipate that, so that if it unfolds that way, we understand it. We don't get freaked out. We don't think the bull market is over. We understand that that is just a part of the bull trend. This is all a bull trend. This was a pullback. And guess where that happened? Well, I'm sorry, this is off right now because it adjusts every day. But this is, we were above linear regression and it pulled back. So I just want you to understand that this is all normal. Even if we have pullbacks, you have to have those for the health of the market. Let me take these ribbons off for a second and just show you, if I go to any of our stocks. Oh, we were stopped out of Tesla this week. So actually, let me show you Tesla. Actually, I can do it this way. Bear with me. Okay, so here is Tesla, and we wrote it up very nicely. We bought it on this day right here where my cursor is. And we bought it at $203.93 for the most part. And we just kept raising our stop. And the white line is our stop where it was. And we were stopped out. And then the market went down a little bit further and came up a little bit. It's a little bit below our stop, not much. So the point of these stops is we then captured, I think we made about 30% on this stock in a very short period of time. Actually, I bought it on June 1st. So that's not bad. But the point is, we don't know how much further that's going to continue to fall. We don't know that yet. So what we'll do, because I still believe in Tesla, is it's now on my watch list, and we will look for another entry that makes a lot of sense like this did. For instance, I can see that the Hull might be turning red. That might turn red and then start to turn back up. We are now below ATR dots. Well, let's see where that's going to go. And then let's see when it's going to turn up. And then we may buy it again and ride it again. Okay. So that's what our stop management does every day. We are having some weakness. Here's my stop for builder. And again, these are automated. So when the price hits it, it's done. If the price hits it and we are stopped out, and then the next day or the same day it goes right back up, well, that's the cost of insurance. I don't like that. You probably don't like that, but we don't know what's going to happen. And these are very intelligent stops. These aren't just hazardly. So you can see ELF is getting pretty close to its stop, but it's still resting on top of those ATR dots. So I'm so hoping that will hold and it will push back up. We'll see. So that's how our stops work. But the most important thing that I wanted to go over today was our 8-day, 21-day rule, which is over here, and our 10-week, 20-week rule is over here, and the fact that that will keep us out of bear markets and give us clear indications of how we can actually make money in bear markets. And we've already shown we make significant money in bull markets because of our stock selection and technical analysis timing. So I hope you feel comfortable with that. And that's what I wanted to show you. I think, like I said last week, I believe that our firm, FCM, is in the very best, strongest position we have been in 37 years of professional money management, and about 16 years of FCM's existence, which it's all just one continuation, in my opinion. We're in the best position we've ever been to avoid downsize and profit from upside. Very, very strong position. If you know of anyone who might appreciate this type of work, I would appreciate your passing their name to me. And all I would like to do with them is do a Zoom call and talk. And see if it's a good fit, because sometimes there are good fits and sometimes there are bad fits. And I can explain that further if you have a question about that. But that's the point. I would love to work with additional folks. We'd like to expand the practice by 4 or 5 clients over the next couple of months. And if you could help us with that, we'd appreciate it, because we do absolutely zero marketing, and we have never done any marketing. So that's a story for now. I hope this was informative to you. I hope it gives you comfort that we just experienced our last major drawdown. We're already back pretty much up, almost near the highs, very close. We'll get there by the end of the year. And we appreciate working with you and for you and your trust. And I think that we're going to have a fantastic second half of this year. It might not start till October, but we're going to have I assume we're going to have a very fantastic end of this year and beginning of next. I think next year is going to be pretty strong too. So that's the story. Thank you very much. And I will talk to you Monday morning, and we'll be back.